Triple Tree Group, connecting people, building communities, helping clients to build multi-generational wealth through real estate.
So one other question we experience is around self-employed people, self-employed taxpayers. So can you tell us more about that and what are the benefits or disadvantages when it becomes tax return?
I love working with people who are self-employed. Many times when they start a business, they're told to go see your accountant, and their first question is, what software should I buy? And I sort of said, don't play office. Let's get going and do the business. And are you a bookkeeper? Do you know the difference between a balance sheet and an income statement? And they sort of glaze over and say, what? So I say, let us look after that. You can do Excel spreadsheets. They're just adding machine tapes, which is all that CRA needs for small businesses. They just want to, if CRA comes a calling, they just want to look at your receipts and a tally and go tick, 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 and everybody's quite happy. So just do simple Excel spreadsheets. If that's beyond you, and I have had people that it is, you can bring your shoe boxes to us. We have people that can do that job very quickly and efficiently, and saves you a lot of decision making and a lot of sweat. So self-employed people, that's sort of the beginning. But we look at 3 areas of expenses for self-employed. They're also called sole proprietors. The one area is automobile expenses, your gas, insurance, and whatnot. You keep tallies of the total amount that you spend on all areas, because they will get prorated based on the mileage the distance that you travel for business purposes versus the total distance you put on your vehicle in the year. So, and one of the key parts to this is keeping a log book. CRA is quite insistent, if they come a calling and want to look at your automobile expenses, they want to see a log by day, how many kilometers you did for business. Don't care about how much you do for personal, because what you do is, well, as I say, I love going out on New Year's Eve and I get gas and I write the kilometer reading on my gas receipt, and then I do it the following year. So I know how many kilometers I put on my car in the year. Then I take a look at my logbook and how many kilometers have I put on for business purposes. I look at my total automobile expenses and I do a prorate based on distance traveled. And of course that includes tolls and parking, car washes, of course insurance, and then depreciation on a car as well. Or if you lease, and there's some advantages to leasing, whereas the value of the lease can be a little higher. So all those get prorated and can be written off. Another part is a home office. CRA dictates that everybody in Canada has to have a principal place of business. So we always like to designate an area of a house or apartment as area that's used exclusively for business purposes. And then we can prorate the total cost of operating your house or apartment or condo based on how much space we use exclusively for business. So it could be 20%. When I say exclusive, the idea is that you don't do anything personal in there. And it's key, because as soon as you say you use, I do some personal stuff in my area, then not only does the space get prorated based on area, but it also gets prorated on how much time you spend working in your office. So that's why we'd like to use it as exclusive use, and then we get to write off, say, 20 or 25%. I don't get too aggressive, because it's tough to be exclusive use. So, and you get to write off interest on your mortgage, as well as property taxes and utilities and internet, and did I say insurance already, and some maintenance. If you paint your office that's exclusively used, then you can write it off, the paint and wallpaper, 100%. If you do other renovations in the house, then it'll get prorated based on the area that we've designated. The other part, the last part, because everybody likes to start with this, I leave it to the end, is the business expenses.
Can we cover the home side? I have a couple of questions.
Sure, we can go back to it.
So in the last couple of years, more people are working from home. So if, let's say, exclusive use, I understand that 100% of the use for business could be a smaller place but nowadays more people are working from home, and 80% of their time can be used. The living room, dining room, kitchen, everything can be used for for their own business. So, is there any changes because of the changes of lifestyle?
Definitely. Quite amazing how the government listened to what happened because of COVID and people working from home. So they put in effect, a $2 a day deduction for working at home, and you don't have to do proof. It's just blanket. So it's up to the first year with COVID, it wasn't as much as it is now. Now it's 250 days at $2 a day. So it's a tax deduction of $500 and no questions asked. However, if you spend a lot more money, i.e. your internet, you had to upgrade internet, and you're using more equipment and more of your house exclusively for being an employee that's working from home, there's a declaration of conditions of employment form that is filled in and signed by your employer, which says what you have to pay to be working at home. And if you work more than 80% at home, then we can write off home office expenses. That's the utilities and whatnot. If there's other expenses like cell phone or internet and whatnot, and they can be written off. So this is an or. You either do the $2 a day thing, or you can do the employment expense thing. But it's a 3-page form that has to be signed by your employer in order to claim that. So it was the $2 a day was a gift, because it's just, you don't really have to do anything. But if you do spend more or feel you want to claim more, then you've got to go this other route.
So one last question about self-employed and electrical car. So they charge their car at home, and how would you factor that when you are doing taxes for them?
That's a timely question. So the last I've heard is that the hydro will just get tacked onto your house hydro bill, and then it gets prorated, which doesn't seem fair, but I haven't seen any writings. Now there is, though, if you own or lease an electric car, there's huge tax deductions available. It has to be 100%, can't be a hybrid, but there's huge tax deductions. So that's probably where they're building in the extra cost of doing the hydro. If you go to a station and have to pay, then of course you can use that as like equivalent of gas expense. So there's no additional value or tax deduction for the hydro that you use that I'm aware of. I mean, there are certain benefits like having the outlets put in the house. The older government had some great advantages. I'm not aware of things now, but those are grants and whatnot outside of my expertise as a tax accountant.
Yeah. Thank you, Norman. And do you have any other question with that?
No, just plow right ahead.
Okay, great.
Purple Tree Crew, connecting people, building communities, helping clients to build multi-generational wealth through real estate.